Okay, so hello everybody and welcome to almost the end or the last event, almost the last event because only after party is in front of us. And welcome to Uroboros Festival, the second edition of Uroboros Festival with topic Designing in Troubling Times. And I'm very happy so that I can introduce on our virtual stage we created during these 14 days in this online environment. Welcome Diffraction Collective. But before I will pass my word to the Diffraction, I would like to thank to our partners because without them this festival wouldn't be possible. It's Slovak Art Council, City of Prague, and Abacus Foundation. Also, I would like to mention that this particular event is part of festival track focused on algorithmic governance, chains, and bonds, and was co-created by me and Denisa Kera. And I would just like to mention that if anybody would be interested to follow us in some after festival sessions. There is a Discord channel. We will share the link in the chat also on the YouTube stream, so you can jump in and we can meet even after the festival. So I'm very sad that this is my last announcement, but I'm very happy that the festival will be hosting and is hosting event organized by Diffraction Collective, an emerging platform for critical discussion on art and algorithm, which developed in the series of lectures on intersections of axionomist philosophy, technology, politics, semiotics, economy, and conflict. The collective started at the Školská 28 gallery, which is not existing anymore, and right now is mostly connected with the project Display, where they are hosting different lectures and series where they brings together different, mostly Prague-based artists, writers, coders, and thinkers. And today they will introduce the project called Derivative Condition. So, Dustin, the floor is yours.
Okay, thank you. So, of course, I want to thank you as well, Mikhail, for organizing this. And also, I want to thank Economic Space Agency for joining us as well. And additionally, Harald Nessler, unfortunately, he cannot join us today. So before we dive in and plunge into providing an overview concerning what this panel will be about, I just want to give a brief introduction to Economic Space Agency and some of the members here. And then I'm going to hand over the reins to Nick, who's going to describe about this prediction market. So first and foremost, representing from Economic Space Agency, we have Pekko Koskinen, who is a designer of reality games, who also plays around with various forms of art. His work includes fictional religions, ways of living, made-up societies, and most of these operations placed within life at large, outside the traditional representative formats. He's a member of Reality Research Center and YCon, an advocacy group for utopian thought. We also have Ekseli Theatinen, who is a radical political economist and finance theorist with a PhD at Helsinki School of Economics at Aalto University. He has published several books on the history and future of the economy, politics, and the affective emotional landscape of new work. He's also a founder of Robinhood Minor Asset Management and Economic Space Agency to open source economy and create programmable organizations. We are also joined by Theo Morales, who is a Robinhood co-op DAO project lead and a computer scientist undergraduate at University of Texas, Austin. And we also have Robert Sundy, who is a Robinhood co-op board member and works at the juncture of architecture, volatility systems design, housing cooperativism, radical finance, and alternative modes of collective ownership for the city as a project. And finally, unfortunately, who could not join us tonight would be Harald Nessler, who has played a formative and instrumental role in shaping the vision of the derivative condition and this lecture in tandem with Economic Space Agency. So Harald is prominent for his work that elaborates on the derivative condition of technocapitalism, a performative mode whose power to claim the future derives from financial models, technologies, and narratives. And so what I'd like to proceed with now is I'll have Nick here provide just a general walkthrough of those who want to participate and or who are going to be prospectively joining sometime in the future about the prediction markets that have been set up. So I'll hand it over to Nick right now, if you could share your screen.
Hey everybody, 1 second, just getting my screen shared. Okay, so I'm assuming everyone can see that. Yeah, okay. So this is a little app I threw together for prediction market for this specific event. Pretty much it's like gonna let you gamble or bet or trade a token that was created just for this event. It's called DIFF, after diffractions. Don't worry, it's not real money, but it's only for bragging rights. And if you have signed up on the forum previously, or if you can sign up on the forum right now, you can get access to this. I'll send you over 50 cents of XDAI, which is the native asset of the chain that we use to run this, and also 10,000 diffs, so you can actually trade in the markets. So as long as you have MetaMask installed, and that's part of the form, if you filled that out, you can just connect MetaMask. And now we are in business. So there's 10 markets for this event, and they have like a range of things. The thing that's like most important to point out is that there's two types of markets here, and that is categorical markets, such as this one. Take a little bit of load. It's blockchain, you know. But now we can actually trade in this market. And actually, we've already got some participants trading. And the idea here is you're trying to predict which of these cryptocurrencies the panelists will mention the most times during this panel. And so we have a couple options for you here. So far, the front runner is Ethereum. And the other thing to notice here is that the price that these trade at in a prediction market is interpretable as like the likelihood of that going to happen. So these are trading at 0.3 diff. So there's potentially a 30% chance of that coming true. And the reason that is because one of these options, one of these shares at the end of this market is going to be worth 1 diff, and the rest of them are going to be worth 0. And that's how the prediction market more or less goes. So we can go ahead and buy. Let's get some Doge references going, guys, right? And then we type in how many diff we actually want to trade. This will update to show what actual like trades are going on here. So essentially, we're buying a ton of people are going to mention Dogecoin the most shares here. We also have like the potential profit. And then we can go ahead and buy. Sorry, the MetaMask just swapped off screens. And we wait for that to confirm. And now I've successfully bought Dogecoin shares for this market.
I have a quick question.
Mm-hmm.
How are you, like, who is serving as an oracle? Is someone counting, or is there some script, or how is it happening?
So we're going to serve as the oracle at the end. Like this is recorded, so we're just going to manually go through and do that. Like if you want to get a little bit more technical in this, this is actually like built on top of a fork of an existing prediction market called Omen. So like they have a Oracle system called like Reality ETH that essentially has people post bonds for which is good. The outcome is like that matches reality. And then they have like a bond challenging game. And like whoever essentially posts the most at the end, that becomes the true outcome. But for our purposes, like it's not going to get escalated because we are serving as the Oracle.
Thanks.
And yeah, and so like that's all updated now. We can check out the history of the market. Should even have a graph here. And so like if you see here, this is my my purchase, and that's how it's just like changed the distribution of shares in this market. Okay, and so that was a categorical market, right? So those are that's a market that has a number of different mutually exclusive outcomes. You're trying to purchase the one that that's going to come true, or you're trying to make money by playing the market. And then there's also scalar markets. So for example, this one. And here, instead of having a few different options about how the market could end, there's like a lower limit and an upper limit. And if like, let me just show you in the actual buy, because like what happens is we don't actually say how many mentions of a derivative are going to be in this panel. What we do is look at what the current price of this asset is trading at, what this derivative is trading at. That tells us how, like, what the aggregated prediction of how many there's going to be in between these two limits. And if you think that prediction is wrong, if you think it's actually closer to 200, then you go long and you purchase shares, and then that will show you the payouts based on what actually ends up happening. So if you went long right now, and at the end of the market, it ended up being 158 mentions of derivative, this would be your payout. So it's a little bit to get your head wrapped around, right? But like more or less, you just check whatever the price it's trading at right now, and if you think that it's too low, then you long, and if you think it's too high, then you short. And those are the two different types of markets that are available. We have 10 different questions. We already have some trading already. See, someone's already taken advantage of the fact that one of our panelists isn't going to be here. So obviously, that panelist is going to speak for the least amount of time, unless something really strange happens, right? So already people are taking advantage of this. They're trading, and those trades are updating the prices, and those prices are represented. Those prices can be interpreted as representing the probability of those things happening. And that's like the idea of the prediction market. Not like it's not so much the prediction that we care about, it's the aggregation of information of all the market participants. Because the market mechanism itself doesn't provide like any prediction power. What it provides is like a way of punishing people who make incorrect predictions and rewarding people who make correct. So there's like an incentive if the information that's being represented in the markets right now is incorrect by your estimation, you should trade them because that is a profit opportunity, and that will update the prices, and therefore will provide a more accurate prediction for everyone. At least that's the idea. So like we're letting you guys try this out. We have a couple different markets, a couple different interactions between the markets even. So we should expect, like we're expecting the markets to fluctuate quite a bit as we go along, and there should be arbitrage opportunities in between them. And if anyone has any questions right now, would be the perfect time. Okay, if that's all, something in the chat, Dustin? No, okay. So then I think we should just go ahead. I think that's pretty much clear. And if you are watching this and you are not yet like participating in this, just shout out somewhere, email. We'll get you the form, and once you fill out the form, we can give you the 10,000 diff and your XDAI. And actually, one more thing to highlight is we're using XDAI, which is a side chain of Ethereum. It uses a variant of proof of stake, so it's not a proof of work blockchain, which is why the transactions are significantly cheaper and faster. So that's why I can give you just 50 cents, and we can have all this prediction. Okay, I think that's all. Dustin, do you want to take this back over?
Yes, thank you. Okay, so I'm going to try to move this right along. Sorry, I'm going to breeze through just a brief introduction, and then I'll read Harald, and then I will, of course, hand it over as well to Economic Space Agency. However, just to maybe provide to kind of profile and survey generally what this panel is about, I just want to I'll just distill it basically in this way. So this is just something I briefly wrote up. It's just that the purpose of our panel is just to kind of survey the current socio-political landscape that we see as deeply entangled with the world of finance, that has shifted us from a world that has conventionally illustrated what we think of our global economy that as resting on, let's say, the extraction of profits through production or fixed capital associated with manufacturing, linked to industrial processes such as building factories, employing workers, producing goods through equipment and construction. What we are now seeing is really a world of finance that's encroaching in every aspect of our life, and rather is based on a model that attempts to convert practically all facets of our life as potentially a future stream of income that has become especially enhanced through the emergence of informational technologies. And thus we can see how our notions of time, the present and future, becomes deeply enmeshed with a form of temporal mining that derivatives reflect. So when we're talking about derivatives, we can readily define them as instruments that are programmed either to mitigate against volatility and risk, or they are tied to price movements of underlyings. So those can be commodities like what we talk about, wheat, meat, sugar, gasoline, oil, gold, silver, copper, weather events, bonds that have effectively transformed our world into a mode of production of risk, as risk effectively becomes our way of interfacing with the future. And thus this points out to how derivatives are wrapped up in the nature of time, where they operate as these tools that work on a specific kind of future mining, so that enable us to extract from the future in the present. And therefore, here to kind of reference this idea is that, as Suhail Malik points out, we can advance the notion that the future actively intercepts and transforms the present even before the present has happened. So thus, they use the unknown future price of an asset and the risk involved therein to draw profits against a present price. Yet derivatives are not locked up in the black box realm of finance. Rather, they're coming to shape the social logic that drives, for example, our social networks, housing mortgages, insurance claims, where the extraordinary volumes of data monitored in real time, coupled with ever-increasing sophistication of predictive analytics, effectively transforms us into financialized instruments that in turn we proceed to adopt a logic of derivatives, or what Harald Nessler and Jonathan Beller contend, the derivative condition, whereby through speculating and waging on the economic value of our underlyings, where we are perhaps data streams, where we are probabilistically calculating and converting or risking in return for greater social capital through our data feeds, stream of income, whether it might be in our situation of precarious jobs or unemployment, which reveals for us that we are differentially organized in our capacities to take and be subject to risk. Yet there is a route of consideration that emphasizes the structural similarity between derivatives and gift economies, as pointed out by Benjamin Lee, who points out that derivatives, gifts, or gifts economy similarly are risk-laden and volatile practices, but as opposed to where we see derivatives now, where we're hostage to financial markets, market makers, brokers, day traders, hedge funds, pension plan managers, insurance companies, etc., we can look at perhaps gift economies as a springboard to reconsider wealth in a lens that recreates the social field and perhaps new forms of new social claims and obligations that can be unleashed. And thus, this kind of process of perhaps looking at gift economies and looking at maybe new social obligations and new ways of organization is why we have economic space agency here together, where their notion of risking together or looking into risking together becomes kind of a critical facet and critical focus here. And so we'll get to them momentarily. However, I just want to also have some remarks Harald Nestler wanted to point out that he provided for us. So I will not take too long because I'd like to get us to shift over to economic space agency. So yes, so just some notes from Harald he wanted to say here. So he says, even though their modern scientific cybernetic manifestation has had a history of fundamental importance for nearly 40 years, derivatives went viral for the first time with the 2007 financial crisis. Journalists and pundits picked up on the theme and devoted telecast, articles, and books to the application of financial technologies, as well as the evident malpractice and economic injustice that resulted and the disastrous consequences of boom and bust cycles, as well as algorithmic asymmetries. Scholars from a wide array of disciplines intensified their research and sought new approaches to critical finance studies. Artists, hacker communities, and social movements ramped up efforts to oppose the repercussions of financial capitalism and to now develop new approaches with open source models, knowledge commons, distributed money systems, and citizens' access, amongst others. So the scope of this critical examination is therefore not restricted just to finance, and I think this is also what's going to be what EXO, Economic Space Agency, also will elaborate for us. So the derivative condition for him, he says, elaborates market terms, models, processes, infrastructures, and narratives in order to expand and reorient the reading to other cultural, artistic, and technological materializations of the derivative. Some quantify their truth in probabilistic terms, such as bid data. Some harness techno-knowledge for emancipatory means, such as a number of experiments with blockchain and cryptocurrencies, especially decentralized complementary systems. Others emerge as artistic, activist, or cultural expressions that correspond on conceptual or fictional levels, and sometimes oppose capitalism radically. But they are all still rarely perceived as based on or closely tied to the derivative, a fact that lends a unique perspective to the debates about our contemporary condition. So, and for the last paragraph here to sum up, the derivative condition, on the one hand, challenges key issues, such as the black box logic of techno-capitalism, its proprietary protocols and innovation cultures, often based on public funding and open source developments in the first place, access information asymmetries in their social impact, precarity as disruption of social achievements like labor rights, the production of volatility within the state finance nexus to leverage competitive advantage by escalating economic and political conflict. On the other hand, the concept emphasizes the wealth of narrative and rendition in open source communities, crypto economics, or rather crypto politics, net and performance art, youth cultures, science fiction, or multi-species ethnography that reimagine other modes of what the derivative and volatility and leverage as its central anchors, if this word could be used for something so fleeting, can offer us for sharing risk and making worlds together. And so here I would like to introduce again Economic Space Agency, and I would like to have Exeli, if you could please join in and start off the conversation and introduce us to EXA. Thank you.
Cool. Hey, thanks, Nick, and thanks, Justin. And hey, really nice to meet everybody here. So my name is I'm Exeli. So I think we are a small enough group so we can have this as a very like a discussion kind of a thing. That would be at least our hope. So our plan is that I'll introduce Economic Space Agency and what we want to do in this session first a little bit. And I want to be like as frank as possible. No presentations or slides, but let's try to talk about these things as how we experience them. And then after me, there will be Theo and Roberto, and then Pekko from the Excel team as the third one. And let's see, we have about an hour, so I think we can. But anyway, so let's talk. So, and even if it starts to sound like a monologue, please interrupt. Any questions? Just let's talk. So, all good? Agreed? Let's do it like this. Yes. Okay. Cool. So, a good friend wrote to me once that that in order to act in the world, first we need to locate ourselves there. We need to, and how we do it is by telling a little story. And we need to, in the story, we need to tell like a story about ourselves, like who we are, what we want, what is going on in the world, how it has ended up there, and what are we going to do about it. So this is my approach. I'm going to tell a little story so that we can act in the world. Or this is like our story, how I'd like to introduce what EXA and Economic Space Agency, like what it is that where we come from. And I start from me, from my perspective. So I start from myself. So so like Dustin was saying, I am a political economist. So I've written quite a lot about the history of economy, of conventions of economy, of money, markets, economic organization, finance as a technology too. And if I've learned something from there, it is that economy has a history. So it has not always been, it has not always worked in the way that we think it works now. It has not always like meant the same thing we think it means today. It has not made sense in the same way that we think that it makes sense today. It has not worked in the same way. And the consequence is that if it has a history, then it most likely also has a future. And this is like the first thing I would like to emphasize. This is the thing that makes us, in fact, excited, that we can be part of this moment where it looks like we can be making history, like we can take part in the engineering and conceiving of what is the future of economy, how it works, what are its conventions. So one of my favorite finance theorists, Myron Scholes, who got the Nobel Prize with about the Black-Scholes option pricing theory in he did with Black-Scholes, Fisher Black and Robert Merton, and so he got the prize in '97. And in his speech, he said that in the Nobel Prize speech, he said something very, very interesting to me. And he said that that debt and equity, they are just institutional arrangements. They're just historical arrangements, and time will continue to blur their distinction. So he was saying that they are just historical institutions, like sets of relations, like shared understandings and communication agreements, according to which the capitalist economic organization works. And time will come that will come and blur, will continue blurring their distinction. And that's exactly what what is happening. And this is the thing that I'd like to emphasize here, that yes, there are some really important technological developments, how the distributed computation, how it makes peer-to-peer economic networks possible. But it's really, really essential that we see what we are doing, or where our exercise is coming from, that we see that in relation to the economic history, like the history of the economic and financial thinking and categories too. Because right now we are seeing a number of conventions in the economic knowledges, conventions, and practices that are breaking down. So for instance, yes, the relationship between debt and equity, it's blurring. There's no question about it. Convertible bonds, preference shares, total return swaps, crypto tokens, they are all like opening up new ways of thinking about the funding of investments. Then money and other assets, the same thing. The distinction between them is blurring. So yes, for instance, for traders, the derivatives on money, they are blurring the distinction between money and assets. Other assets are gaining the same kind of moneyness than only money used to have. Then conversion to fiat, for traders, money appears not as a necessity, but more like a costly conversion point that you just have to go through it. There are already like ways in the derivatives markets and now in the crypto tokens to bypass the fiat money measurement. Nature of assets, the intangibles as an asset class, they cannot be actually valued with our conventional valuation methods. They're causing like serious problems in the accounting. The distribution of risk, like how the precarization of work, subcontracting, the gig economy, it has changed the way, or how the workers are carrying much more and more risk, and it's breaking the equation between employment and survival. Trust in the traditional financial instruments is gone. Like when you think of what is going right now, like the mistrust in the conventional banking, and then the quantitative easing, and this year how the asset, the balance sheet of the Federal Reserve, for instance, have really exploded. Like there are serious questions about this. So these are like the actual conditions, the combination of these actual conditions, conditions that create the actual condition for the emergence for what we are doing. So things are, the economy, what it is, it's in movement, and we are just continuing there. We're like enjoying the ride and trying to guide the movement to its next direction. So in that sense, from our perspective, it's the financial derivatives, but especially these cryptographically enabled decentralized economic organizational systems, or like these crypto tokens, that are breaking the conventions of our economic organization, and they're doing it just like in the 1840s, the emergence of the joint stock company and the stock exchanges actually really changed the way that the capitalism was organized. So by the mid 19th century, we had come to this place where the rich didn't have enough. They couldn't anymore alone fund the next steps of growth of the capitalist corporation. So in Great Britain, they abandoned 200 years of legislation, which had like forbid joint stock companies as harmful and speculative entities. Suddenly, they were just allowed, and it changed everything. So suddenly, people were able to combine like this massive amounts of capital. They were able to sell ownership in these small parcels and then trade them in the aftermarket. They were at the same time, money went through a transformation from and credit replaced its form in gold, replaced gold as money. At the same time, then they needed to invent these new ways to organize and discipline massive amounts of workers into this. How do they integrate these workers into these production machineries? And wage work was invented. I mean, this is the change in the society that Marx writes about, and an entire new mode of production, a new mode of society emerged out of that transformation. And we are thinking that we are now at the seeing something very similar, or we are at the turning point of a similar significance. At least we would like to seek toward that kind of a turning point, or create it. So, and we know that it's in the nature of the turning point that it needs to also challenge the conventional categories of analysis. So we know that it's no longer the joint stock company or the corporation or the profit that is the core concept, the core category, the core verbs that we want to use. But we need to create a new language or a new sense for our experience. So that's the one trajectory, or one part of the story where we are coming. And then the other one, and also this is like the if I'm a political economist, I'm also an organizational experimenter or an artist. That's how we see ourselves too. So that means that we've been like creating these large-scale experiments. So we've been experimenting on creating these new economic and financial formations, creating social experiments by using finance, using these organizational super capabilities of finance to create different socialities. So using finance as our medium of expression of this new medium of expression, like a form of art, and that's really the place where we think that if there is a place where the art and politics meets, it's this place where the old forms are breaking down, where they are collapsing, and we are, I mean, the old forms of subjectivity, of organization, of economy, of rules, they start to collapse, and we are anticipating the new ones, the new forms of life, the new forms how we relate together, and that has been really the project for us. So Robin Hood was which we established in 2012. That was really our first attempt at creating these new kinds of formations, these monsters or new economic financial formations, and a lot has been like written about it and its adventures. And today, a little bit later, we will talk about the latest ones, like what is going on with the Robin Hood right now. But before that, still a couple of words towards EXA. So the original thought of EXA was also based on our experience with Robin Hood. So we used we used finance as a medium to express a new sociality. So we actually re-engineered finance, re-engineered the way we were risking together. We re-engineered the risk and cash flows. And if something, the experience was that we actually have the power and imagination to do it. And when at least that was the from my perspective, one of the most important experiences there, that when people like got it, you could see it in their eyes that there is no return after that. There's no going back. There was this moment of shit, we can do it. This moment of empowerment. And the next immediate thought was that, okay, so if we have this power, if we can do this, wouldn't it be cool if everybody could do it? And that was the thought of EXA, of Economic Space Agency. From the beginning, the idea was that, what if we had this tool set? What if we had this medium to express these new kinds of economic organizational formations, the new ways of relating together, new ways of risking together, what we then called economic spaces. And that was the original idea of EXA, and very soon it started to gather around it a group of very, very smart people like Jonathan Baylor and Benjamin Lee, who Dustin mentioned in the beginning, but many others, like people from different disciplines. So we have political economists, software architects and engineers. We have game designers, but some best game designers in the world, like Pekko, who will continue a little bit later. We have like finance theorists, economic anthropologists, monetary theorists, artists. Exactly the kind of group of people who you need to rethink and re-engineer what economy could be. That's what we're thinking. So if we have a goal, actually what we are thinking is it's to open the medium of economy, the language of economy, to give everybody the same capability, the same capacity to express themselves and the economic relations, So we want to, and why? Because we need to decentralize the authorship of futures. So we need to open source and decentralize that which remained still centralized in the era of social media, which means the information and protocol layer called the economy. So that's the goal. We want to expand what the expression of economy, what can be thought, what can be thought, and what can be concretely done in economy. What is it? Because the nature of our economic networks, it's bounded by this. It's bound by the expressivity of the language that we're using to express it. So we want to create a more expressive language. We want to open it up, more expressive language, describe the economic networks, how we are related economically, how we interact economically. Like what are the participants? What kind of participants we are? What is the nature of our relationships? How these relationships change? What is valued in these networks? How it's exchanged and accumulated. So another way to put the same thing, like what we are after, what's the goal, is that we are like really focusing on what kind of economics and politics are becoming possible when our economic organizational composition becomes a software design question, when it becomes a design question, when it becomes bounded only by our creativity. And that seems to be one of the most difficult things to understand, that the crypto economic networks, they really have the potentiality to irreversibly change the nature of economy itself, like the economy and its conventions themselves. So when you look at what is going on in the crypto economics or in the DeFi discourses, not much rethinking of the economic component is there, or the finance component of the DeFi. There's rather pretty conservative orthodoxy, which seems to be implicitly embraced. I mean, about what is money, what are markets, what is credit used for, what is accepted as collateral, what are the best, what kind of best incentives create the best social outcomes. And we think that it's really this orthodoxy which in fact is blocking the real potentiality, the real potentiality of this new distributed computational substrate. So we rather want to unlock this promise, or our aim is to unlock this promise by a new understanding of economy, which we want to expand. This new understanding of economy as a programmable network. So a programmable network as a group of agents which are interacting together according to this certain shared agreements, that we can open this and the interaction protocols as a design space and an expression space for everyone. So if you ask that, what is the new thing? What is the new thing that the native properties of these peer-to-peer networking technologies are really making possible? Our answer is it's the economic expression. It's our capability to start expressing our own economic organizational composition. Yes? Okay, one last thing, very quickly. So just to bridge this to the this economic media, to social derivatives. So from our perspective, the story goes that what is happening and where we are positioning ourselves is that we're really moving from the era of social media to the era of economic media. We're moving from social networking, like networking socially, peering socially, meaning that reading messages, forwarding messages, reposting, linking, forwarding content, and liking. We're moving from there to peering ourselves economically. So by offering and reoffering, by trading, staking, entering into risk and value relationships, like mutual record sharing relationships. We're engaging in creation of credit, stake equity, and other financial relationships. That's the move. So we are, and it's not only us. I really think that it's in the time that we are discovering this new value form, or new value formation, which is explicitly social, explicitly relational, and organizational value form. That's the thing that we are calling economic space. And the other name for it is the social derivative, or this. It's like a new value logic or value calculus, a mode of account, a sensibility that draws us together. So the social derivative it's just another name for this new value form. It's this form of this risking together that Dustin was mentioning in the beginning, or this risk generating practice, which is a social relationship. It's a social relation that takes us beyond the profit-taking exchange or just a market or ownership as the only forms of relationship. So if you think of Exa and if you think of Robinhood, what they are from our perspective really social derivatives. So Exa is, here we are, it's this group of people who have come together, and we are together facing a risk or uncertainty or an opportunity, an opening, and we are leveraging our ability to act together in order in a way that we can grab this opening opportunity and its upside and enjoy the upside collectively. That's it, and I think that's the nature of the Robinhood 2. Theo and Roberto, are you ready? I can pass the ball to you.
Yeah, absolutely. I think it would make sense for Roberto to start, but just like one thing that I feel is important to mention, like something that was really important for me when I first wrapped my mind around EXA was the ability for it to give us this design space, this toolkit, as you speak of it, that has only previously existed in the hands of governments, right? And like we as a society like share this like possibly and pretty likely unwarranted trust in the government and its ability to consistently hold systems in place, right? Like our economy, like the relationship of debt to each other. But if we are now at the point where we can have technology that we can trust, why go so far as to allow a government to prescribe our way of living, our economic expression to each other, when we can very well design it ourselves? I feel like that's so beautiful, so important to recognize, and for me, like, was so great that it's not about a single economic system that EXA is creating. It's the toolkit, so that it is no longer the government exclusively that has the ability to prescribe, let's say, supposedly trusted systems, but now it's each of us, and I feel like that's so beautiful, and I just wanted to comment that before Roberto gets started.
All right, yeah, thank you. I also want to thank the organizers and for this wonderful space we have, and following up from what Axeli was saying on how we ourselves can think of where we position our collectives, our own sort of participation within the world as new social derivatives. We're going to share you a little bit about Robinhood and its sort of new transformation we are currently having. So in late December and early January this year, in our last General Assembly, we approved the transformation of Robinhood into a distributed cooperative organization with a protocol library or toolbox for smart contracts. So this sort of enables a new stage within the project from 2012 to 2020 and towards the future. And so at Robinhood, we have asked ourselves, how do we rethink our position with respect to markets in terms of systemic and existential risk, which is a common theme in this festival and this thinking about the social derivatives. And we have come to realizing that from a risk perspective, we actually live in a world we don't really understand. And this is really key for Robinhood and many other reflections we've had in similar projects. We are continuously exposed to fat tails, that is, events outside any statistical understanding of reality. And this should make us very wary, very reflective on how we view ourselves. We have developed a view where we think our only statistical edge over the very long term is to actually gain from volatility, right? So volatility becomes a vector where these social derivatives can transform our commons project into something different. So within Robinhood as a cooperative project, we have become aware of needing to shift away from this kind of systemic fragility into a risking together strategy for the possibility of creating a convex commons, right? So this convex commons becomes the key sort of strategy we are aiming for. So for this protocol library for building long volatility bias as a design intention, we're working from within convexity to increase our probabilities of survival, right? Survival becomes our sort of most fundamental interest. As we know, volatility can be completely uncertain and is completely uncertain. We know that volatility, as mentioned by Elena Esposito in The Future of Futures, is unpredictable because it is produced by the very present that tries to predict it, right? So it's a never-ending loop of uncertainty. That's volatility. And we're going to show you a bit of visualization to grasp volatility in what it's in our thoughts. So this is the volatility surface. This is volatility in terms of time, in terms of contractual expiration. This is the S&P 500 as a derivative in options with its own volatility curve or surface as we see it here. We can see the strike prices, the contracts. We can see a time lapse of how this volatility, this energy shifts from day to day, from minute to minute, from month to month. And we want to harness this volatility as a kind of a different asset class. We have call it, if we want to think about it in the markets in terms of what are the true asset classes, we have come up with a kind of synthetic way of looking at this with a different lens. And we think there are actually only two asset classes. We have long volatility and short volatility. So this is the way we're building the convex commas within Robinhood. Here with the dots, for example, you have the bid-ask spreads of the option prices for each of the expirations. And this is what we're working on as protocol library within the Robinhood DAO. And to end a little bit with our current narrative we're constructing, we can say that Robinhood is mutual aid that gives us options, right? It's a protocol library for harvesting together a long volatility bias. That means risking together, which means building together, which means caring and protecting together, which means harvesting together. So I'll leave it at that, and I'll have Theo to share a bit more on what the DAO and the library is about.
Awesome, thanks so much, Roberto. So I'll share a diagram really quick to show you in practice like what this looks like, what it looks like to actually take this philosophy that Roberto has illustrated to us, the fact that we can protect ourselves and each other through this long volatility perspective, and on an implementation level, like what that really looks like. So let me see. I can get this. Oops. Cool. It is telling me I'm sharing my screen, so hopefully you can see this. Does everyone see this?
Yes.
This image? Awesome. Yeah. Very cool. So this is kind of a diagram explaining like how it is that we would cooperate and actually practice this philosophy, because it's one thing for us to have this take and for us to say, well, we would like to protect ourselves, each other, our clients perhaps, and take this view on long volatility. Now, if Goldman Sachs said that, that might have some value, but some could also argue that there's nothing to really hold them accountable to that, right? There's nothing to hold them accountable to the fact that we would like to participate in a certain way, and we would like for our interests to be protected in a certain way, right? And so the first question, before we really dive into like what all is going on here, what steps can be taken in our project, in our organization, we have to think about the substrate, right? And we spoke about substrate with EXA, and we spoke about the fact that the basis is these cryptographically secure protocols and processes that can allow us to not trust every individual that we're interacting with, but instead use a smart contract, a program, as this proxy of trust, right? As opposed to me needing to trust the CEO, the board, and all the stakeholders in Goldman Sachs. Why could I not just trust this single contract that should hold them accountable, right? And on the flip side of that, every other individual, every other person that might be working at this organization does not need to trust each other, but only the contract, right? And so I could go on and give an argument for why something like Ethereum, why these new Turing complete blockchains exhibit this mechanism of only needing us to trust smart contracts. But it seems like the majority of the individuals, the festival as a whole, has quite an emphasis on blockchain. So I won't waste your time going into that. But two things that I will say that are really highlights on like why this is important for us to use a smart contract as a substrate for our DAO rather than just an entity registered in some country, is for one this aspect of distributed state, right? The way in which DAOs are organized it's very much like a business operating agreement for a standard limited liability corporation, right? There's some rules encoded in this document, except we put this onto a smart contract, which is really more so a program than an actual contract. And it has this ability for us to evolve it, one, and for it to be propagated throughout the network, such that everyone can hold a copy of the state. Everyone can see who's a member of the board, who submitted what proposals, what votes, and kind of like really reinforces this idea of only needing to trust the single smart contract rather than all the entities involved, right? And a bigger aspect of the reason that we can trust this contract is the fact that upon deployment, this contract is immutable, right? So if I come to this group of other people in the Zoom call and maybe listening in elsewhere and say, well, I wrote the smart contract, please look over it, and let's agree to, from now on, live as this smart contract prescribes, right? Once we have agreed on it and deployed it, there's no way for me to maliciously change that or even change that with good intentions, right? And so like the aspect of this does not necessarily mean that the way in which we decide to organize today will be the same forever, because there are stipulations in there that allow us to evolve the organization as a whole, right? And that stipulation revolves around this proposal protocol. This is highly influenced by two projects. One, the Index Co-op, and it's built off of and heavily influenced by Moloch version 2, which is a smart contract DAO. So there's four prime things that happen in this organization, right? One, you would want to become a member. You would want to possibly evolve the organization, that is, maybe change the structure, ask that we adopt a new system of voting, even to change the proposal protocol itself, can be done by submitting a governance proposal. And then a big part that I think is a very big part of what Robinhood has been in the past, right? It's this idea of having a space in which we are not only focused on extracting profit for stakeholders, right? We're focused on extracting profit in part to fund projects that aim towards commons-oriented goals, right? And so there very much is an aspect to this that is retained from the previous iteration of Robinhood, that is this funding of commons projects, right? Which is our commons grant application project. And then there's the entire sphere of contribution to the organization, right? Building a strategy that actually identifies these long and short volatility assets and uses them efficiently to create a portfolio with which we can use to of course reward members, but also fund commons programs. And so to start off on the left on becoming a member, when I say claim your blockchain identity, what I'm referring to is creating a private and public address on a wallet, right? Something like MetaMask that Nick was showing to us earlier. And once we have this serves really as our proxy to the blockchain world, right? It allows us to have an identity and to actually submit proposals and submit votes on proposals. And so the first thing that we would want to do after claiming our identity is submitting a membership proposal. And all of these, the last step in these like singular paths or these distinct paths are submitting a proposal of some type, right? And there's metadata that dictates the differentiating factors, but they all follow a very similar structure. There's an introduction, an abstract, a motivation, and resources necessary, right? And this really outlines from a high level view what it is that you're trying to change, right? And in this case, we're trying to become a member. And so onto the proposal protocol we'll go. And the first thing that will happen is that we have this bot that since our name is Robinhood, we thought we would appropriately name this robot assistant something from the Robinhood Forest. And one of those individuals is Tuck. And so we've got this robot assistant Tuck, right? And they handle the intricacies between all of these processes. But it allows for a way in which members only ever really need to interact with Mattermost, which is an open source Slack alternative. And everything's going to happen there, from communication to voting to proposing. And so upon becoming a member, right, submitting an application just through our website, Tuck will announce it to all the members and say, hey, there's a new member that would like to join. Please talk about this. And also, if this is something that feedback is required on, give feedback so that the membership proposal can be revised. One aspect of this that is important for the revision is the fact that when you ask to be a member, you are giving an investment in the form of either a product or service or a crypto asset investment in exchange for tokens that represent the right to vote and pro rata member shares representing the value of the organization as a whole, right? Specifically, the value of the wallet of the organization, right? Because this is a smart contract, and so this smart contract, this DAO, has a wallet or a bank, we could call it, that retains the funds of these crypto assets. And so once we submit a membership share, we are asking for a set amount of membership tokens, right? A set amount of value from the firm in exchange for our investment. And this might not always be something that we are going to have as a very accurate pricing initially, right? And so having this informal discussion period allows for members to reach out to the potential member and say, hey, actually, I think you're asking for a bit too many tokens. You're asking for a bit too much of the value of the co-op. You should reduce it or change it in such a way that more accurately reflects something that would be passed by the DAO, right? And once we've come to a place where the proposal has been revised, it is now time for a member of the co-op or of the DAO to sponsor this. And upon sponsoring it, they place a deposit representing their commitment to this proposal, right? And now it is the formal stage of the proposal life cycle. Before this, in the announcement and the informal discussion, this is just a potential proposal. This is not something that the entirety of the DAO needs to be involved in yet, because we can accept proposals from anywhere. Potential members are obviously not members of the DAO, but also those applying for grants are not members of the DAO. And as opposed to needing to spend everyone's time voting on every single proposal that gets submitted, we want to have this preliminary filter in the form of a sponsorship, right? And once this filter is passed, once a current member decides, actually, yes, this potential member can add value to the DAO, and we should seriously consider adding them. And the next thing is that our robot assistant Tuck schedules a governance call. And this is based on the availability of the most amount of people. And it's a set time for us to get on Mattermost and through a video call, really hash out discussion of whether this member whether this potential member should become a member, right? After this, we've got a 7-day voting period. And within this voting period, it's a simple majority, no quorum requirement, instance of voting in which all members can only vote once. After the 7 days are over, there's a grace period. And something important to notice about this grace period is that we have the ability to rage quit, which is really an opportunity to liquidate our investment before sustaining the consequences of the result of the proposal if you voted against the realized outcome. So in membership proposals, it's not likely that we're going to have a case in which you're going to want to exercise this rage quit. But if you can imagine an instance in which all of us in this Zoom call vote to reduce the value of Excelli's shares to 0 and inflate the value of our own shares, that's very likely, or it's at least possible, to pass by simple majority rules because the majority would benefit from that, right? But Excelli should not be tied in to forfeiting the value of his shares if there was no way for him to exercise the kind of distaste for this other than voting no. And so during this 7-day grace period, Excelli has the ability, if he voted no, to liquidate before sustaining the consequences of this proposal, right? And this functions as the prime mechanism to protect ourselves against malicious voting when it occupies the majority, right? And finally, it's the implementation step. In this instance, the member will be rewarded these shares, these loot tokens and membership tokens representing the value, pro rata rights to the value, and governance rights, respectively. And their investment will be deposited into the wallet of the smart contract, right? And from there, these next few steps, these next few paths can be taken by a member. One, the evolution, which is as simple as submitting a DAO governance proposal, again, outlining an introduction, abstract, method, and resources needed for modifying the DAO in one way or another. And this could be, like I said, a modification to the proposal protocol itself. It can be a modification to the number of shares that we possess. So if we think about someone who is actively contributing in the form of writing articles or blog posts on behalf of the DAO, maybe they want to raise. And they can very easily apply for that raise by submitting a governance proposal. All aspects of the DAO can be modified and evolved based on, one, the ability of it to be proposed, which is given, and two, just that simple majority, no quorum voting that takes place during the voting period, right? And finally, or not finally, but the second to last, and one of the most important, is this idea that revolves around the philosophy, the Robinhood as a whole having this aspect of mutual aid. And one thing that's important to highlight is that this philosophy, this long volatility take, is very much a form of protecting ourselves, right? Protecting ourselves because of this exposure to risk that we have in a world that we really don't understand. And so if we can have an organization in which we are sheltering each other through, like, one, the diversification of risk through many strategies, and two, this take on long volatility, then that in itself is a form of mutual aid. Contributing and never having a grant being given to a commons-oriented project itself is a form of mutual aid, because the capital of the members is being protected by each other. But an entirely equally important part is the diversion of some of these funds, of some of these profits, into a separate account that is made available to applicants for commons-oriented grants. And so this idea of having commons-oriented grants is open to any project. There is no necessity for them being a member. But the idea remains the same. It follows a proposal protocol and goes through all those steps that we kind of walked through. And the main differences fall primarily at the end. It's solely that which happens at the implementation phase that is different, because the actual decision process remains the same. And so at the implementation phase, of course, funds will be liquidated and given to the applicant upon them being awarded the grant. One of the other more intricate and also very important aspects of this is the actual contribution to the organization. And so this that I'm going to speak about revolves very much around actually creating automated strategies that exploit vulnerabilities in the markets or take advantage of this long volatility view. But there very much is other ways by which we can contribute to this organization. These are just, or this discussion around strategy is one of the ones that is compromised of composed of a few different steps. And so the first is really just learning how to be dangerous in creating automated investment algorithms, right? And that's composed of two parts. So one is a financial theory course taught by Roberto, and the other is a financial programming in Python course taught by myself. The idea is that we will primarily use Lean, an open source trading engine put out by QuantConnect, in order to create a modular approach to algorithm development, breaking it up into 5 steps and having 5 teams addressing each step of a fully automated portfolio management algorithm. Right, and so once you've taken those courses, or one of those courses, depending on your interests, the next step is to actually join a team, one of those 5 teams. And having worked in those 5 teams, it's likely that you'll eventually create a strategy. And having a strategy put together, it's now time to actually propose that. And of course, with that proposal, propose compensation, because we can't expect for individuals to devote a substantial amount of time and not get compensated for it. We very much would like for it to be the case that upon submitting a strategy proposal, you're submitting a few things. You're submitting, one, the fee structure, which is in relation to the Commons grant proposal, because, or the Commons grant process, because there's a certain portion of these profits that need to be redirected to the Commons fund for grants. And so you're including a fee structure, you're including a compensation for this strategy for yourself and your teammates, and finally the actual strategy being employed and the allocation to this strategy. And so once again, it goes through the proposal protocol, and this informal discussion revision period is very important because it's unlikely that you're going to land perfectly on a fee structure, compensation, and allocation to this strategy on the first hit. And so the continual revision of this until we get to the point where we feel we're prepared to actually move into the formal stage is contained within this informal discussion and revision period. And finally, someone sponsors this, and it goes all the way down the steps to the implementation stage, where those that were working on this project then get compensated, the strategy gets deployed, and assets get allocated to it. And finally, the funds are made available on the Enzyme Finance Protocol. Previously called Melon Protocol, they're a decentralized asset management smart contract that allow for us to offer funds or strategies and investors that are outside of the organization that have no relation to Robinhood to find this on that platform, to invest in the strategy, to see its performance history, and as such, to pay fees into the Commons fund and, of course, the fund of the organization as a whole. And so that's a very high-level view. There's a few special cases in here, but that kind of covers the structure with which we contribute, evolve, and create within this space. that's all I've got for that. If yes, I will absolutely. I'm seeing that question. I'll absolutely send it and make that picture available. And we've actually got a little bit more documentation that I can send to get you a better view on like what all this project is looking like. It looks like by the end of June, I'm sorry, by the beginning of June, we're going to have the first iteration up, and members are going to start being onboarded into this new phase, and we're really going to start taking advantage of this this protocol library and the way in which we can organize transparently and scalably. But if there's any questions, I'd love to take them or discuss whatever we'd like. Yes, Jacob, I think you're.
Thanks. Yeah, so first I like to thank you, and I'm very excited to be here because a few weeks back I started printing out EXA papers, so happy to be here now. And
Awesome.
so two quick questions. One of the first is it the Robinhood co-op where Jan Grieg was also a part, or is he still a part?
I'm not sure if he's still a part, Axeli.
Jan Ritsema? Jan who?
Jan Grieg.
Jan Grieg.
Jan Grieg.
Jan Grieg, yes. I think so because, well, we have there's like 1,000 members. It's gone past the number that we know everybody personally.
I think
Jan Grieg
was probably is a member. Yeah, like.
Yeah, of course. It's Jan Grieg. Yes.
Yeah.
Yes. Yeah, absolutely. So yeah, he was. In fact, we had this important session in London in 2015 where he was there too, working with us. Yeah.
Okay, thanks. Because I wasn't sure if there's the connection. So because I saw the talk a few years back, I think. So yeah, that's cool. And the second question was, I'm not that familiar with the concept of convex commons. Could you please elaborate a bit on what does it refer to, the convexity, or how is it beneficial?
Sure. Yeah. So this is something derived from the way we look at structuring options as a kind of a derivative. Volatility, as we know, is the main source of option premia, which we can use volatility in doing options in buying options or selling options. We construct different sort of compositions of options, whether you can be concave or can be convex. It's a kind of a synthesis of this. If you are concave, it means volatility actually hurts you, right? If you have a shock in the markets, you will be negatively exposed to volatility. If you have a convex exposure, on the other hand, you can benefit from a shock. So it becomes like a smile, you know. The benefits actually rise in a kind of an exponential manner. Similarly, if you're convex, which actually represents most assets, we're not really aware about this, but most assets that we know, most equity, most crypto equity, as we know it, is short volatility, right? So we are negatively exposed to volatility. So that's why we think that volatility can be critical if in this sort of new space we're going forward, where we need to protect ourselves. So that's the idea of convexity in the commons.
Thanks. And is it also related like to the shape of the surfaces you were visualizing this or?
So yes, convex would take it being like a smile, right? So it's convex, and concave would be like a frown. You're right, it's the opposite. So that's how you express this exponential aspect of how options are built.
Okay, thanks.
Yeah. I think we can take some questions generally also for Axeli at the end, but since we're over time, let's move.
Yeah. Yes.
So okay. EXA in itself is a form that is developing different kind of branches of you could think of them as perspectives, but also like ways of conceiving and also implementing different branches of economy and different ways to approach this sort of space of potential that you could have for new economy. And yes, Robinhood predates Exa as a form, but more and more the direction has been that we want to kind of recognize it as a kind of one branch of development. But as an example of another branch, which I think helps also to create a kind of snapshot of Exa, because these are not all the branches, I'll pick another one, another branch, which is particularly analyzing game structures and their potential, not just relations, but actually their kind of potential palette for what economy could be, structurally speaking, like a structural palette. And I'll start with the obvious questions, why games and why to have this sort of concentration on game structures. And to kind of create a prelude to that, I'll take the question of organization in relation to economy. Now, organization as a concept, we won't have a historical look at it. It's actually not that long, really, as we currently conceive it. But it denotes an area where we can see associated concepts like systems, etc., governments, so on. But we can also look at economy as a question of organization. And here, one might more turn towards concrete or concrete examples, really. And first think of, let's say, certain symptoms that, for example, in economy itself, money and, let's say, in crypto, the presence of tokens and coins is almost like this forefront, like highlighted ground that people concentrate first. But if we think of any form of tokenization, whether it's a crypto token or it's something like, euros or dollars, or even if we think of stocks as a form of equity, all of those forms are dependent on there being an organizational layer, usually of multiple organizations that actually provide the functions for those tokenized things. So think of it simply like if you take a stock, but if you remove all the exchanges, all the exchanges that provide for possibilities of exchanging that stock to another or exchanging it to fiat currency, the stock has no value. Similarly, if you think of something like Bitcoin, yes, it can be in your wallet, but it's really, first of all, the contractual system that Bitcoin is, and then it's all the exchanges, etc., that have kind of spawned up around it that create the potential of value. The potential of value is in this exchange or that exchange, the offer that actually exists there that provides you the possibility to utilize the token. So all of these forms, you can think of, metaphorically speaking, more like buttons, and the organization is the machine. Now, if you're not functioning with the whole system, the button seems really important. They are you press a button and things happen. But as we know from machines, if there's no machine underneath the button, nothing happens in itself. So in short, the buttons are instrumentation. They have a role to play in the whole organization of such an economy, And that role is to ability to create interfaces and the ability to distribute, the ability to be in many places, move, flow, etc. But they are not an independent component, and they are not storage of value in itself. Rather, they are also, to use another metaphor, like keys to an apartment. The apartment is not contained in the key, but the key allows for access to the apartment itself. But it's the apartment that is the fundamental part. The key is the instrumental part. Now, from all of this, to come to this point of that economy ultimately is an organizational question, which Axel referred to already in his part. If we take it seriously, that comes to this point that how we approach the compositional side of economy. If we are to think of creating new economies, it's not merely a matter of making this token or that token. It's actually the matter of creating the organizational layers, whether programmed, whether written on law, whatever the medium, usually a combination of those, that actually enable the functionality and create the functionality, which is then addressed and utilized by tokens. And as per the earlier examples, whether it's fiat currency, stocks, or cryptocurrency, this is an inherent quality. There might be systems that are somewhat different, but this is something that actually crypto has not destabilized or not changed in itself. So this sets a different kind of fundamentality of where economy actually stems from. And it's a different kind of paradigm for how do we see actually economy forming, that it's us coming together and us setting a unity between us, mostly consisting of some kinds of rules, in the widest sense of rules you can think of, that enables functionality beyond us. And this is true of all organizations, but it's also true of all economy. So, but why am I talking about organizations if the point of view is games? Well, we can look at games, and I'll put some inspirational material on the screen, or illustrate it maybe also. We can think of games as microcosms of organization in this wider sense, not just the organization how we conventionally understand it, but organizations as social systems that have an explication of how they work, have a sense of how you interface with them, how you function within them, and the sense of how everything functions, or not just sense, but a kind of explication of how they function. So games as microcosms of this are interesting from several points of view. First of all, games were not for the longest of time really recognized as art, have been functioning with similar principles. You have the right to create any kind of a game. The game doesn't have to be useful in the real world. It's a creative space, just as a painting is, or play on a stage is. But their creation depends upon creating the sort of organization that functions to create the game itself, to open up its possibilities. And in this sense, they have been an experimental ground for, well, thousands of years, but interestingly, in a kind of spawning fashion in the last few decades, maybe last 50 years, the growth of forms and types of games has ballooned or exploded, whatever term you want to use. That has also created a significant growth on their structural palette, the different forms that they can have, and different forms that they hold. So, for example, inside a game like the image here, which is Antiquity, you don't have to understand this game, and I won't explain the rules because it's a complex game, etc., etc. But I want to point out a couple of highlighted areas here. Here, the player or the user, however you want to think about it, is not even represented by a particular figure, token, whatever, but it is actually a kind of play space or player space, as I like to call it. And that player space has several forms. For example, you see these 4 sideboards around the middle board. That's part of the player space. It's a kind of a micro game that the players play, which then also extends to the central board. And rather than going to the details of this and what the microgames are, I want to point out here what the picture of the person is. And then I want to compare that to, if you think of yourself, even in some context like Facebook, etc., how also in Facebook you're, well, on the forefront, you're an identity. You might be your own name, or that's at least what Facebook wants to push you to be. But you're also a form of affordances, interfaces, possibilities, or rights. You have a right to write a message, and then that is, by the set of rules that Facebook is, expanded in other people's feeds, etc. You can move to the category of sending pictures, and that becomes its slightly different but similar form of interacting. And it's really this sort of player space again. And I could make the same example from Twitter, etc., and whatnot, to highlight this sort of similarity between these different forms. But what's the difference here? Or what is the interesting possibilities that this opens? Like I said earlier, games in and of themselves have approached this as a creative medium for a long time, and because of this, the kind of variety of forms of what the player is, how they function, is vast. At the same time, games have usually an economic angle. It's once again quite wide and varied. For example, if you make a comparison between token structures in terms of crypto economies and point structures in games, you will notice many, many similarities, like tokens and points or point structures in games appear when you want to create another abstract layer above things like the board in itself, which are more static, and you want to create a desire for value. That is, if you want to make some place in the board to be valuable, well, you create a point structure and say, if you reach this place, by whatever rules, whatever conditions, you gain these 2 tokens, and then at the end of the game, these 2 tokens are worth this and that, and so on and so forth. Now, the key point here is this is very similar, structurally speaking, than what tokens are in and of themselves, or even what something like fiat currencies are. All of these systems provide the possibility of distribution and instrumentation that can move between people quickly, but then depend upon some level of organization that actually solidifies the possibilities to utilize those. So fiat currencies, tokens, points in games move quickly, are exchanged, switched by certain rules, but then they offer this possibility of utilizing the game in a different fashion. And once we make this comparison, we can notice this possibility of, well, if we think of how many point structure there are in games, I mean, this is board games, but we can think of video games, we can think of role-playing games in the traditional sense. It's a very, very vast library because the medium of games is a creative medium. And in this sense, this palette is something that has been underutilized as a source of potential forms, potential methods, and potential systems, quite explicit systems in many cases, to create or envision forms of economy. And this sets up, hopefully at least, some kind of an answer to this question of why games? Through the angle of the organization as a kind of fundamental layer, and then looking on top of that, the vast range of forms that the games offer. There's underutilized palette of systems that could be used as economies, and in and of themselves are microcosms of economies. Now, few perspectives on this. How do we break down games then? Certainly they are fairly explicit systems. If one thinks of board games, you can see essentially all the rules have to be utilized by the players in and of themselves. But if you want to translate them to economies, how do you see possibilities of moving back and forth between them, taking parts of the games, etc., etc. And we've been developing approaches towards this. And one of the key approaches is utilize the concept of rights, but let's say an expanded concept of rights, as almost like a Lego block of how to construct something towards a game, but also how to construct something towards an economy. And I'll try to concretize that by giving an example of, well, if you think of any game, since you probably don't know antiquity, I'll pick something like chess. You can translate the whole of chess into rights. Like in the beginning of the game, you have the right to move all the pieces, but only one of them on your turn. And when they move, they have their own logic. This moves one space forward. This moves like the knight can jump over pieces and has a certain pattern it can move. And once you utilize your right, it's transferred to the other player who has the same right, and so on and so forth. But we can also think about this in terms of economy, like you having money, to use a very kind of traditional example, is really your right, for example, in a certain bank to withdraw to a certain amount within its confines granted by that bank, which then has a right, the bank itself has a right in a larger system of economy, and so on and so forth. So in this sense, one could go much more in detail, but this should give an overview how looking at rights in this sort of wider fashion allows for bringing games and economy into the same structural language, that we can think of the functionality in the bank and the functionality in games in even in pieces, even in fragments, like a certain mechanic from games, and then combine, formulate together, or insert, take a certain game form and think about it, how it functions in what we traditionally consider as economy. So yeah, essentially we have a Lego block there to create, compose different economical systems, different ways to organize the economy itself. But secondly, there are other less maybe structural or at least things that offer more than just the structuralities, ways to look at this. Earlier I mentioned this, how the player is presented in a game like this, the game like Antiquity, and the nature of that player and the comparison to Facebook. Now, we often think of one of these sort of hard questions of current economy being like, how do we trust the identity? How do we know that the person is the person, or whoever accesses this account can stay as the same person? And these are in and of themselves a field of complex questions. But that often becomes the only main focus of what crypto economies, for example, have to solve. And it's certainly part of the question. But I would say, while a hard and essential question, it's almost like the smaller question there. The logic question is, what is the player space they enter to? How do they play? Of course, we can say that's a user space, but they are really the same term, just with a different kind of nuance. But structurally, we're talking about the same thing. Like I said, in this game, the formulation, if you compare this to many economies or many other forms that are in, for example, traditional organizations, is a much more wider in terms of scope what it could be. For example, that the player plays, if you look at the kind of bottom of the image, they play this sort of mini games of putting Tetris pieces to build their own little city or suburb of buildings, which then become, as they're placed, a range of possibilities, organizational possibilities, that is rights again, of how they can, what they can do on the main board. And of course, what they can do on the main board is part of the user space again. But if we think of other games, we can have very representation, very different forms of the player space and how they can function within them. Sometimes they can be simple while the system is complex. Here, for example, this is Carcassonne. The player really, at each of their turn, gets essentially one tile, and they expand the map. But the complexity is the map itself, and the pieces of value are, for example, the forest that it forms. Every full forest is a point of value in itself, so on and so forth. And with that example, I'm also pointing out how when you have this sort of player space, it's already designed towards also value systems and organizational systems, because the game itself is communication. That it creates an organization between the players where they respect the rules, they know the goals, or even set the goals, or even affect the goals in the game itself. This is an example of Flux, which is a game where actually the main part of the game is playing new rules into the game, which changes how the main game works. So your moves in itself create entirely different goals for where the game ends up. And this is, of course, a mere snapshot, but it's pointing out, highlighting that the range of how we conceive what can we do compositionally towards economy. Once we start from this question of taking the deep dive of looking at ultimately that we're facing this question of organization in the widest sense, not just what it has been conventionalized to and how it's seen in our current culture, but almost in this sense of when you say to yourself, I must organize my table. And that question containing this sort of sense of creating some kind of a system, how this becomes something that unifies both economy and games and organizations as we traditionally know them, and brings them into the same structure of rules. But also these forms, I think, highlight this, that the range of how we conceive them, all of these fields, as we have common building blocks between them, is so wide, and most of this width has not really been implemented in our culture. How are we together inside a game is a very wide question. Of course, it's a wide question, how are we together inside an economic system? And it's a wide question of how are we together inside a co-op or corporation, etc. But traditionally speaking, when somebody wants to form a new organization, it's almost like going to an IKEA catalog and thinking, like, I don't want to form a corporation, so therefore I go to a co-op. Whereas if we look at games from a design perspective, it opens this question of how are we together from the building blocks forward? And this ground is something that, of course, we have made quite a bit of progress, I think, already on this area. Like, for example, this sort of conception of rights in a particular way, and how that can be a Lego block to unify these fields and then provide a component for construction of these fields, is one of these issues. But we looked at many, many other issues as well. So for a small snapshot, in the last few weeks, we've been looking at one approach in games, which is, or could be categorized as soft and hard rules. So this is more an example from role-playing games. It's actually a page from a game called Wonder Home, where you have both hard rules. This is a way to generate a place, in this case, a university, but also a metaphorical sense of a university. And the hard rules here is, like, for example, it says this place can always, and then it says choose two aesthetic elements. That's hard rules. That's saying, like, you have to choose two. There's no ifs and buts there. But underneath these hard choices and hard rules, you have soft rules. So, so for example, this place can always, so you're generating a university, either a concrete one or a metaphorical one. That gives it a move where, for example, it can describe a vast amount of knowledge still left to learn. But that expression is a rule itself, but it's a very soft rule. Now, somebody playing at university, which is possible in this game, has actually a lot of leeway of interpreting of what is vast amount of knowledge and how it's described. It could be a vast amount of books. It could be something completely different. So this is an example of a soft rule. And the system in this case actually utilizes, I would say, very, maybe efficiently is the wrong word, but creatively, the combination of this, and also very knowledgeably. It understands the difference between hard rules and soft rules. And once you take this structure, this sort of making a differentiation between hard rules and soft rules into, for example, organizations, one will notice that there is actually a huge amount of soft rules inside of organizations, from charters or principles, etc. The interpretation element is a key factor there. And these are part of functionality. But once again, if you bring this from games, there is a vast amount of knowledge of how to combine these kind of things, and how actually combining a hard rule with a soft rule creates often a functionality that is highly flexible, but also has certain limitations towards its range and where does it go, etc. And it also provides potential modularity, because with hard rules, you can set hard borders, and therefore your pieces can be more modular. So to summarize, I wanted to kind of cover or give you a snapshot of snapshots of the kind of directions we're going with this branch. I'll also give you a link. This has a name. It's called Xorg, which you, by the way, can join. It's a function through a Telegram group, which I'll share in the chat in a second once I get enough hands-free out of this. But it's also a snapshot of EXA in itself as an organization that wants or has one of its goals to conceive and implement new spaces of economy. This is not the whole space of it, and it should not be. No perspective, whether it's this Xorg, whether it's Robinhood or other perspectives, won't give us the whole of economy. It's ultimately a cultural question, and ways to conceive culture and its structures, society and its structures, whether they are corporations, banks, particular token structure, whatever they are. But it is, in itself, one way to develop this conception, to develop a field where we haven't tread enough, we haven't spent enough time and consideration. And in this case, of course, there is even a pragmatic sense to it, that there is this field called games that has done a lot of experimental, you could say art-like, exploration of the space. How can we take this exploration that remains in many forms, many structures that are possible, and utilize that as almost like a map of possibilities, so that we are not going into this space blindly? And I think that is a characterization that fits with many areas of EXA and the nature of EXA itself. So that's the summary I wanted to give. I'll give you Telegram link in a second, and then I'll shut up. Thanks.
All right, thank you. Yes, so I wanted to thank Roberto, Theo, Pecco, and Exeli, all for the very comprehensive and exhaustive overview. First and foremost, Mikhail, can you tell me how much time we have for questions? Because I know there's also an upcoming, I believe there's a final music event, so I don't want to cut in too much to that, but do we have time for questions?
I would still try, it's like that we already started the second event. I just checked everything is working there. So yeah, let's do it. And my question is for Pecco, can I share the Telegram group also on the stream, or is it only for people here in
No, it's for everyone. And I just shared it. Sorry, Roberto, first one came directly to you, but now there is a message for everyone.
Super.
And everyone is welcome, essentially.
Great, thank you. So I would actually like to open up the floor if there's some questions, or who would like to maybe, yes, open up, or if anyone has something they would like to start up with. Or thoughts, doesn't necessarily have to be any questions as well, just thoughts, considerations.
I think Jakub.
Okay, yeah, so I have this kind of question comment. So it occurred to me when you were speaking about kind of gathering the volatility or utilizing it, converting it to value, that in Czech Republic there was this inventor who a few years back invented kind of a new hydrodynamic, what's it called, turbine, which actually is able to utilize like flowing water, which is not so, well, it's slowly rolling water, let's say. And he was able to like utilize it to generate energy. And I was curious whether there might be, and this is perhaps out there question, but kind of speculative, but whether there might be some kind of mathematical analogies or similarities with like fluid dynamics and kind of, because in a sense, right, his turbine is actually exploiting volatility of the water, and he invented a new kind of way how to exploit different kinds of volatility in the water. So whether there might be some inspiration in the fluid dynamics in the kind of algorithms that you might be creating, or whether this is like stupid or not stupid, but yeah, whether this is too not relevant. Those kind of metaphors or analogies.
Maybe I can quickly mention something, and it actually relates also to games and markets and real life. It's this notion about ergodicity, how ergodic processes take place. Ergodicity is a term coming from thermodynamics, and it's actually a term that some option traders and also economic theorists have gone into, which explains on how a particular sample, either ensemble or time, their average is representative of the universe, let's say, of what is at stake. If it is, it deems to be ergodic. If it's not, it's non-ergodic. And by saying that markets are unpredictable and we don't really understand them from a risk perspective, we're actually saying they're non-ergodic. They work in the similar fashion as thermodynamics, in its basic form, at least, right? In the sense of fluids and in engineering processes. So what is interesting for us, let's say as traders, and also I think it would be interesting to listen to Peko in terms of how games can also be impacted by this, is on how actually ergodicity for risk managers becomes ergodic, because our downside, when there is an infinitesimal probability of risk of ruin, it means it's already ergodic, right? So even though markets are not ergodic, for the risk manager, it's actually ergodic. So that's why being long volatility sort of averts this possibility of risk of ruin, at least theoretically, right? And I think this could be interesting to be seen in the context of games as well.
Yeah, actually, just a short mention that to kind of underline the sort of parallel discourses, that one of the very good texts, which is I think from the 90s, called Cybertext by Espen Arset, makes the main definition of games as ergodic fiction. And the book is really about that, like how to resist the kind of that they are not narrative, but rather their logic is ergodic, but they function like fiction. And that's one read that would be very useful, because it's a good book. It's a very well written book, and also utilizes the basis of ergodic and the kind of that concept as to bring the games into the same family.
Absolutely, yeah, it's something to check on.
I also like just listening to you and thinking through it, because that's maybe for me right now the best expression was that I was stuck on the idea of magic circle, because this is for me, I was start to like kind of like falling into it and start to losing it, because with magic circle within the games you are sure that it ends, but once what you all said and combined, does it mean that this magic circle is not existing anymore and we are like living it?
Oh, you're opening a can of worms. Like the discourse around magic circle as a concept, which is from Huizinga, from 30s, 40s. Bad with years.
Something like that.
Yeah. It's been under discourse for quite a while now. Well, maybe the last 20 years. But just to summarize it, I think magic circle was a useful concept for its time, but we can already see that many games are you could say like more functioning like law. Like law is a set of rules, but it's a more network nature. That is, it's not really a circle because it constantly interfaces. It's even with you when you're walking across the street, but its branches and the kind of network it forms still create some qualities of the circle, but really surpass the kind of idea that you can put a certain contour upon it. And there's already kind of cases of many games, especially if you look at games that go into real life and so on, that don't really anymore stay in the circle. But the main point is like it was always about kind of knowing the core, but the core is not essentially a contour. It can be, but it can be also other forms. That would be a very rough summary of that discourse from the last decades. But I do think it's important for economy, because economy is not a magic circle either. But this actually brings the games into the, like it removes that limitation of having a discourse with economy once you start looking at those kind of games and how are they structured.
Okay, but I will try to shoot again, okay? Because like Jasper Joe, he uses this term half real, that the games are half real, yeah? That you have this portion of fiction, but this portion of reality. And reality is it's basically the rules of the game, and fiction is usually the environment you set this rule in, actually. And that's like pretty much fits into the like the magic circle. And you know, I understand like the games which are kind of the over the edge of this, let's call like circle, which is disappearing. But that's maybe when I'm heading. You know, that it's that how this how it's all set up. You know, actually that's because, for example, for me to understand games, half real is a very good explanation, because once you don't believe it's real, like the rules, you are not playing, and that's what the Jules says. Actually, unplaying, it's kind of a very tricky moment when you know the rules, but you are kind of against them, actually. So does it mean that you are still playing, or are you outside of this? But he still used the circle also as a metaphor to express what is happening within.
Yeah, like I said, it's a big discussion in itself, but I do think like there's already cases that point out that while you can use this sort of hard lines as a way to explain things, they don't actually hold up. Like back in, I think almost 15 years ago, I once created a proof of concept to point out how the magic circle doesn't hold by making a game that was the size of a business card. It was actually a business card. I carried the proof and gave it to everybody in my business card. And the point was that it was a game where you had an angle, a view. It was a filter. That is like, it said like, you are this kind of character. Every human you see is this and this kind. There were actually different variations, so I won't go into the details, different games. But that game in itself, like you got this description. After that, if you played it, you would see humans differently. You would potentially approach them differently. But once you play that kind of a game, it often becomes fuzzy when you're not playing or not, because you might not be playing, and then you suddenly notice something, and your mind wakes you up to the game. Like, oh yeah, that character is actually I don't know, to make a banal example, perfect vampire, and then you're back to the game again. So so this fuzziness, once you put it in practice, or this sort of melding between the lines, is actually a natural quality. And this that's not the only example, but it kind of points out towards this, that I think structurally we're still taking maybe not baby steps, but almost like, and how to make structures that don't adhere to contours, or where there are no hard limits, which is actually also part of economy. Like we're always in an economy, even if we're not thinking about spending, etc., is a good informative source. It's actually pointing out the structures that are possible to games, and also a way to expand the games, but then the games can come back and expand the economy, so to speak.
Okay, thank you.
Thanks for a good question.
Pecco, do you have more information on, I think you said it's this paper you wrote about the magic circle? I would love to take a look at that.
I didn't write, so I can even send you, if you give me the information through some sources, I can even send you probably the original games that I made. There is one paper that kind of touches upon this issue. I can send you that link too, but I don't have it at hand. It's in one book in itself. So if we can utilize the Uroboros diffractions, whatever, if you send them your email and I can get it, I can send you the links because yeah, I don't have them now.
I think that I didn't share with you the Discord channel, so I will ask Jonas right now, who is here with me, silently to share the Discord channel link to Discord channel to chat, and then you can use it
that's good.
to share the info actually. So
yeah,
it would be great. Yeah. There you go. Actually, that should be working.
Yeah, and
okay, thanks.
Pecco, perhaps if you please could share it in the Telegram chat, that would be great.
I can, yes, in the Xorg Telegram, I can share the material there as well. Yeah, to surprise others. Jakub is part of Xorg also, so amongst other things.
I was going to bring up while you were speaking about your thoughts on Magic Circle. I'm not sure how relevant this thought is, but what came to my mind was I've always kind of thought about unconscious economic behavior and conscious economic behavior.
Mm-hmm.
That has to do with what you're mentioning, but it's almost this idea that there are certain actions or behaviors of players in a game that are done consciously and unconsciously, but it's game logic, they don't differ in that sense.
Yeah, and also what might be unconscious suddenly creates a very forefront conscious thought, like you suddenly notice something, and like this is precisely why you cannot set the limit, and especially if you look at like experimental live role-playing games, etc. This is another which is in the bio. Like I created this 1.5 month religion. The religion was fictitious, but the people were playing it in their real life. They were who they were. They were just had this added part that they were in this religion. And what happened with the players, what they would be looking at TV news and suddenly thinking about, because the religion was about how you express yourself, they suddenly kind of fell into the game again by just reacting to the news through the game, and then it would go into the background and so on. This was constant. So this was really kind of putting it in practice how the limit is not a hard limit. It's more like, just like if you're in work, you might put your work mind at the forefront, but the work might still be present in other parts of your life. It actually functioned in a very similar manner, that the game became its own kind of filtering system, like that you would utilize whenever it was useful.
I actually have a question. I mean, it shifts gears from games altogether, but more or less, I would be interested. What's more or less your assessment too at this moment concerning kind of rotating savings and credit associations, and then more or less the poor man's bank, or what they're called. I mean, I'm not too knowledgeable, and I can't readily at hand maybe point to some concrete examples, but I would just be curious if if any of you, if anyone also present, if you see this as somewhat serving as a template, or has served as a template for something with Robinhood and or for EXA at all.
Roberto, if you want to take that, this sounds like your area, and also Robinhood, of course, or Theo.
Dustin, can you repeat that? I'm not sure I understood.
I was just asking
about rotating savings.
Yeah, like rotating savings and credit associations. I don't know how familiar you are, because as far as I was understanding, they're kind of those peer-to-peer banking and lending systems that you see, especially in developing world countries like Tandas and Chamas. So yeah, I was just curious. For example, I'm not too familiar with all the details, so that's what I was just asking. Maybe if any of you are familiar, and if you feel if these are already kind of somewhat present strategies that are effective, especially in developing countries. If you have anything to weigh in on in that case.
Yeah, we can, I mean, there are definitely some interesting examples, even in the digital space, for credit mutuals. It's not something, at least as Robinhood, we're going through. I mean, when we think about mutual aid, we're both looking at it in in an organizational level, from the DAO to the protocol, but also in the terms of using options as mutual aid, right? But in terms of rotating, I think possibly the closest thing that comes to mind is the way of index investing, right? Where we have a rebalancing of assets given certain criteria. If we pull them as a kind of way of a mutual in a similar fashion, we can maybe replicate some aspects that have worked in some areas of the world in terms of mutual credit. But it's a topic in itself, and maybe if somebody else has a concrete example or experience, that would be valuable.
So maybe any other comment or question? We are already like about 26 minutes over. So I think when there will be no question, maybe Dustin, or maybe Dustin, if you could maybe, how it will be with the workshop, like with the outcome of the prediction market? Those will be the next step.
Yes. Well, Nick, if he is here still.
Yeah, I'm here.
Yeah, maybe you could fill us in, because I think you were monitoring in real time, and also I know VTech.
Yeah. So the prediction markets, like, they don't actually close till midnight tonight, so you can still trade on them.
Yeah.
That's something that's typical with all prediction markets. Prediction markets, like, that are decentralized. Well, I mean, this one isn't, but it's built on the same infrastructure that decentralized markets are. They have like a significant period in between when the event ends and when the market closes, to like prevent any to prevent like that people trading on a market that has that, like, the resolution won't be actually known by the time that the oracle has to vote on it. So there's a built-in delay period. So tomorrow, like, it should actually resolve, and then you'll be able to go back to the site and withdraw from the individual pools. And then, of course, that's diffraction token isn't actually traded anywhere, and it's not worth anything. So you didn't really get any windfall, but like, we'll know who was able to predict the best or not.
So we will see the results, but we will only able to see the results of the specific wallets. Yeah. Yeah,
like you can go, you'll be able to see that, like, who ended up with more diff at the end of the wallets, but like, there's no leaderboard or anything like that.
Okay. So it will be even hard to find myself maybe in the list.
I mean, like, what we can also do is send out an email to the email list for the people that registered, because
would be great if you would share it with me. Maybe like as the aftermath, it would be nice to share, because just like I see I guess the only fragment of people registered. So let's who registered just show up. So let's share with all of them, like, the results of what they could.
Yeah, no problem.
Perfect. So anything else, or maybe some closing mark?
Yeah, I mean, if I would hand that over to the members of EXA, if any of you guys would like to provide any closing remarks.
I mean, just thanks, and
yeah,
and also, like, there was this question on the sending messages on the Discord. I just joined, so my name should be recognizable. So just send me a message on that. And yeah, thanks is enough from my side.
Yeah, thank you all so much for taking the time to listen to us.
Yeah, thank you very much. We also want to mention that we'll be opening for new memberships for Robinhood. We just posted the link for our page in the chat. Yeah, so thanks again. Thanks for this organization.
And
I wanted to thank you all again, yeah, for the really, I mean, I think this conversation it can certainly bore a lot of fruits in terms of thinking and exploring. So yeah, so again, I wanted to thank you also, all of you, for joining and for the very enriching conversation, and also for everyone who came here as well. So I think this was, to me, quite a fascinating conversation. I hope it was for everyone else. And finally, thank you, Mikhail, for the organization in Uroboros. So yeah, so I guess I have no further questions. So I'll leave it up to you, Mikhail, if you want to say the final words here.
Just asking, can I share the link also publicly on the YouTube, or it just has to stay the Robinhood copy? I can share it publicly on YouTube. Yeah, okay, perfect. So we will do it. Jonas will help me with that. And Dustin, I want to thank you also, and all of you guys, Nick, everybody who was collaborating on this. I think I very much enjoyed. It was challenging, but a nice experience. I think this is a good way how we show to people what the prediction market is, and the way how you organize it just very well fits into what we would like to be Uroboros doing also in the future. So thank you all. Thank you, Roberto. Thank you, Theo. Thank you, Pekko. And thank you all who joined us, also who already left us, actually, who stayed with us. So guys, have a great day. And also thank you from the Uroboros Festival. This was the last workshop. This is the 14th day, almost 50 events are gone. So there is a live concert. So if you like, jump on the website and follow the stream from Fuga, from Bratislava, Slovakia. So thank you and have a good night.